Well, guys, the results are in, and as we suspected, Jerome Powell and the Federal Reserve cut interest rates by 25 basis points. But what's actually happening underneath the hood? Where are Wall Street moving the funds? And why is the US 10-year rejecting this key level so important for us as investors and traders? Today, we understand some dark pool activity in one of the most interesting asset classes in the world, US Treasuries, along with, of course, the big moves on the markets. How much better can things get over the next 3 months? We've got the data, the margin balances, and of course the call walls coming your way in today's video for all of the biggest stocks around the markets. And that's only to get started. Gold having a massive bounce off that zone we discussed in our previous video. Join us, guys. There's a lot to get into. Let's get started right now. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be talking everything from the macro to the lead indicators to the hottest charts right now, including what just happened on big banks and can we continue to see a huge rise in some of the biggest tech stocks in the world. Well, let's begin with retail sentiment. As we know, if everyone is fearful, that can be a good time to buy. And when everybody's kind of neutral, that can also be a good time to hold. So where are we right now? Well, it's important to note that these data stats were taken before the election result, so they will change over the next week. Make sure to subscribe so we can get those updates to you. But generally speaking, we're in a pretty balanced market. Is this good? Well, it is good for the bulls. And of course, we're coming off a level that tends to have more in the tank. So effectively, if you're suspecting that the next couple of months might be good, well, as we do know, the data is also agreeing with this type of stat. So what about when the S&P 500 does a gap like it did just the other day? 2.5% gain with less than 70% of the New York Stock Exchange up overall. Well, as we know, this tends to lead, it's pretty rare by the way, but it tends to lead into general bullishness, specifically over the next 3 months. 83% of the time being bullish, not so good when you go to the 12 months, and of course the mean being 8.8%. Does this stack up though with everything we've been discussing on the channel for a while? Well, if you watched our previous video, we discussed IWM with such a huge gap up. What does it do? Sometimes the next couple of days can be shaky, but generally the next 3 months, wow. Exceptional gains, 20.5%, 80% of the time. And this is what we call the post-election pump or up kind of tick that we tend to see. Whenever you've got these kind of big gap ups, especially even what we saw here on the S&P, we've got to remember this means that big funds have made a huge decision. What are they all banking on? Well, of course, they're banking on corporate tax cuts, not only being rolled over, but potentially improved across the board. And this leads into sometimes big sugar rushes. Now, will it all end badly? I saw a few comments over the last couple of days saying this is not going to end well. Well, it all comes down to timing, but I would definitely say that we could be shaky. And as you would know, whether we got the Democratic win or a Republican win, it was our belief that we were going into a problem somewhere specifically at the back end, maybe of 25 into 26. So make sure, of course, to subscribe to the channel because as always, we'll be using our lead indicators to figure out when that may be. But for now, do we see a post-election pump? Well, in 2016, we certainly got it in the Russell. In 2020, the Russell went absolutely ballistic. And so far, so good for a similar thing in 2024. If you actually have a look at the returns from November 8th, 2016 to December 31st, you may notice that the price returns were exceptionally good during the first little period of time, about, neutral, I guess, even down over the next period. And then, of course, 2018, the midterms were very poor indeed. Could we be following a similar path? Let's discuss usually what happens. The post-election pump into the inauguration dump. This is one of the big things that, of course, people will be discussing over the next couple of months, and it really does present that there may be a pullback that could be quite large sometime early in 2025. Will that be the crash? It's unlikely to be a crash in the markets, but it may look like one if it does come through. So remember to follow the channel for that type of update. Let's now take a look at whether we should be concerned about talks of a bubble. Well, as we say, if people mention bubble, it usually means there's more to go. And one of the big keys is FINRA margin debt. Overall, we always see an all-time high on margin debt before we see a dump in the markets. And right now, while we saw an uptick with September, latest charts, by the way, in the links in the description down below over on our X, we don't tend to see overall a market kind of dump here. Is there a lot of gas left in the tank? Generally speaking, you would have to say so. Here are some of the most notable periods when we hit really high periods in FINRA margin debt. And of course, we're nowhere near that point just yet. So some very interesting charts there. We'll get updates on that every single month over the next 2 years for sure. Market expectations for Fed funds rate. As we know, everybody's kind of going, well, okay, how many cuts are we going to get? Well, it turns out I think the market's overcorrected. So basically, if you look here at the dot plot claims that we should be looking at about maybe 3.25% by December of 2025. Now, the market is actually changing the stats here to be higher. Could this be an opportunity for Treasuries-based traders? Well, we'll look at those very soon with the dark pool activity, but we did expect a 25 basis points, and this is currently where the market is projecting the kind of yields over the next year. Some more good news for, of course, gold, one of our best investments of 2024 on the channel. Looks pretty good. Great bounce over the last 24 hours. Obviously, some nice replication trading there. But more importantly, we're seeing the beginning of retail flows. Obviously, ETFs starting to come in with gold. And as we've suspected, this usually means that we're 2/3 of the way through the move. Effectively, we've been bullish all year, great returns. At the moment, it just seems to be that the public is waking up to, oh, maybe I should have some gold in these uncertain times. Let's move over to the S&P 500 in terms of put-call ratios. You'll notice that we're at a 2.3 only coming into the election. And as we suspected, this would probably lead into some kind of vol control. And that vol control fund would have to therefore purchase in. Over the next 3 months in particular, you tend to see very good gains, and even 6 months can be quite good off these events. Remember, it's pretty rare to see PCC that high, and it just shows you how much fear there was coming into the election and how much of that is now dumping off. Notice the VIX got crushed since the election all the way back down to 15. When we now move over to Bitcoin, things are looking good in the crypto markets. This is just a post-election pump that we've seen before. And obviously, it usually leans into risk on over a decent period of time. You'll notice here Bitcoin in 12, Bitcoin 16, and Bitcoin 2020 all led to around 12 months of gains. At this point, we've just maybe seen the beginning of what crypto markets are about to do. Ethereum also getting a notable breakout over the last 24 hours. So we're still in earnings season. We'll always update you throughout earnings season. These are still the big moves this week, but generally speaking, we're now through the biggest parts. Nvidia becomes the focus for most of the market in a couple of weeks' time. Let's move to dark pool activity. IWR, the iShares Russell mid caps. We've got some big transactions coming through those. As we suspected, this was possibly accumulation. We've since seen huge gap ups, but just remember, this is Wall Street positioning in. Now that we've seen their hand, they want to go buy. That means that small caps and mid caps could be where the big flows are coming through, especially over the next 3 months. Now let's talk about Treasuries. Some big transactions actually coming in here. And you'll notice that we've got 3 huge transactions all around the same levels. If Treasuries manage to regain back up and make a higher high, this could be a big deal, showing that maybe Treasuries are ready to make their next move. Remember, we're now probably behind the dot plot, and the market has overcorrected for what's been occurring. Let's now talk S&P 500 before we get into the positive gamma situations. First up, that's a big move. We almost hit 6,000 already, and we actually hit a very important point being 59.80. Now, this is a core wall just before the key psychological of 6,000. And what you might notice is that we have some good signs for the bulls. First up, we've got a gap to the upside being an island reversal. That's a strong momentum play. Second up, we basically have what you would have to say is pretty decent upward volume ticks, and the advanced decline line has also been improving. But let's have a look now at the futures markets. And you'll notice that again, we're hovering around that 59.80 as we record this right now. And what this was over the last 24 hours was the options high level for the day. Perfect, great level. Obviously, that's why we put them in. Now, where's the next one? 6,018. But this may be a level that's hard to overcome. So let's actually have a look at the options market. And I want to begin here with this 59.80 level. Notice over the next 24 hours, while we are in positive gamma right now, if we're able to crack 59.80, 6,000, of course, that's going to continue this upward squeeze that's going through. But it is also a well-struck zone over the next week. And we're going into OPEX. So that means that when you look at this, there's positive gamma everywhere, there's calls everywhere. But this 59.80, 6,000 strike is very, very strong. And it could be a little bit of a test, I think, for whether the bulls want to continue to push this sugar rush just yet. Let's move over to Nvidia. Same thing here. You'll notice the 150 call coming in. It's what we thought. We're very close. Usually traders tend to take profit a little bit earlier than the main key level. And the same thing's happening here on Tesla. That 300 strike. Wow, we're really approached everything perfectly at this point in time. And while there's probably more upside in the future, could this be a resistance point that you may want to pay attention to? Well, it depends whether you're a trader or an investor. I think investors don't need to worry too much right now. Traders may be saying, well, I'm going to be a little bit cautious in terms of maybe I don't want to enter extra positions just yet. You know what I'm saying? So basically, there's a different kind of attitude towards each one. I noticed in the comments yesterday, oh, Tom, you're getting so cautious already. I'm not cautious. The next 3 months look incredibly good. If you're an investor, positions-based trader, anything like that, you're probably looking at this in a very bullish light. However, if you're somebody that is looking at entering into a new position, is this the best price? Well, you've got to look through the asset classes. Let's have a look at the US 10-year. Obviously, a huge rejection off this key zone, and that's led into some pretty interesting moves in Treasuries. As you'll notice here, volume is up. Obviously, large trades are up. And if we get above 93, that could be a swing towards the upside. We'd be going past the daily 20, which is a pretty key level for the Treasuries themselves. And it already is starting to look like someone is starting to build an accumulation position. This is what we've been looking for on Treasuries for a few days. And remember, people are freaking out. So that's usually a good sign that we're getting close or we may be on those lows. Let's have a look at home builders. Things, of course, improved since the election. You'll notice here we hit that major low that we were talking about from this sell, and then we've bounced back up. So again, things are looking better. Bit of a pivotal point here for home builders. We get a new high. Again, further risk on, you'd have to think, and we're sitting right on that resistance. Let's move over to the US dollar. Rejections at this point, but nothing serious. Unless it's under 103.30, no shorts on the dollar, I would think. Copper, waiting, of course, for Chinese stimulus. We're not above 4.5 yet. So because of that, even though it's bounced up hugely, it really comes down to whether we're going to see the stim from China, which eventually we'll get, but we haven't seen it just yet. Now let's move over to gold. Now, this was a pretty good trade. We had the head and shoulders towards the downside. We had that first bull zone that we've sat for ages on, and we got an exceptionally good entry off that from day traders' perspective. Now we've found the first resistance. Now, why is it the first resistance? Well, because we have the daily 20 moving average, which has been well respected on the way up, acting as dynamic resistance. That, along with the fact that we haven't made it above 2750, means that this is just a short-term resistance for now. But what I do think is that it's made a pretty good case that there's strong buyers here. So if we get pullbacks, I'd expect them to potentially be met by bull demand. GDX was another one that we had in our private community that we spoke about over the last 24 hours. Very good trading off this. And we were very bullish on GDX coming into the day. Why? Because it had bounced off our downward side here of the channel. And of course, it had a pretty good day at 2.41%. So GDX may have some more room to run, and obviously gold looking improved. What about oil? I think it's too close to call. You can actually make a case on the small timeframes for both sides. There are trades and key levels at both sides, but we'll reconvene when we see a clear path on that. Let's talk about Tesla, very close to the 300 strike. We know a lot of people will take profit around here, so it's kind of around that 303. Do I think Tesla will do better in the future? Absolutely, I do. I think Elon was a huge winner out of course, what happened this week. And you've got to think that 363 is very possible. So some stuff here that's pretty interesting on the charts. When we move over to Nvidia, you'll notice that we're getting close to that 150 strike, which is that core wall. Still all good. Multi-months still look good. And in general, nothing really to be concerned about, but it is approaching those resistance highs. What about HSI? Well, it bounced up and it's dumped back down again. Now, is this okay if you're an investor? Sure, it's not too bad. Eventually, we're going to see stimulus that's going to excite the market. We know that that will eventually come. It's just a matter of timing. And right now, we don't have the copper flow to show us that timing is great. That being said, if you're someone that's an investor or something, it's not the worst price in the world. It's the discount we were looking for in China. And obviously, it may go down to the 61.8, but you've got to be aware of it. US 2000, not quite at the high, but what you might notice is that KRE did hit our first resistance and go a little bit above it. So it's to be expected to lose a little bit of the sugar rush and have a little pullback here maybe. and then, of course, continue on. Now, does that mean, again, you need to be worried if you're holding for a few months? I don't think so. I think things look pretty solid from the perspective of how the market is reacting here to everything going on. So some good signs there. I also noticed in the comments, a few of you guys were worried or were saying you don't need to be cautious on the Qs at this stage. Yeah, I tend to agree with you. I mean, you've got to remember that July, and this, I'm not actually cautious on it. Remember, the data stats, 3 months, very good. Remember, investing and trading are different. Traders need risk-reward ratio. Investors just need to say, is there more further upside if I hold over a period of time? We try to cover both on the channel here. So just remember, we had that July high. We've actually been in a pullback in time or a pit since then, and we coiled recently with a breakout to the all-time high. So that tends to suggest whenever you see these things, there's a bit more to come. And of course, all of these markets are now digesting effectively what they are now going to get, which is a corporate tax cut. Whether that's good or not for the long-term future, we'll see, but it does create sugar rushes. Let's move over to Solana. Solana's hitting a resistance high, which is obviously a key level for the markets in crypto. And Ethereum broke above that very important 2780. This has been a great replication trade as well. I'd suspect there's more in Ethereum, so even if it pulls back now, it's more than likely going to push towards that 3200. You've got to remember, support resistance traders will be looking at this as supports into resistance. So there will be some sellers here, but I think in general, this is a very positive sign for Ethereum moving forward. And then, of course, there's Bitcoin, which is still just grinding higher as we go. The stats really do back up crypto at this stage, and everything we're kind of finding out about markets looks pretty good for them. If you enjoyed today's video, please remember to subscribe. If you want to know more about how to replicate some of these trades, check out our day trading masterclass. And obviously, the big thing here is to be up to date with the charts. So make sure to follow us over on X as well if you're interested in some of the charts we've shared today. The good news for the bulls is that margin leverage is quite low at this stage. Obviously, the data stats perform pretty well over the next 3 months, and we have to think that pullbacks will be met by bull demand. In terms of day traders, it's all going to be about some of these key levels. Gold in focus, of course, and there's plenty of other stuff out there at this stage. Thanks so much for watching. We'll see you in the next video. Bye for now.